Welcome back to Preparing Financial Statements. You're joined here with Megan Ruby, a senior in the Financial Services Group, as well as David Stone.
Hey, thanks for having me, Megan. David Stone, Senior Manager in the Financial Services Practice Group. Happy to be here.
Happy to have you. Today, we're going to be going into the statement of cash flows. So, it really provides a representation of the cash inflows and outflows of a company during a period of time. So, companies are required to break out their cash flows between three different sections. You have your operating, your investing, and your financing activities. And if a company is using the indirect method for its statement of cash flows, you're really going to start with the net income and deriving cash flows from operating activities. And then the statement of cash flows, it's going to be really essential at taking a look at what's going on with the company. Because even if a company is profitable, it can have negative cash flows. So I'm going to give it off to David over here. He's going to go into a couple of the first steps, and then we'll go from there.
Yeah, thanks, Megan. So, when preparing the cash flow workbook, so not necessarily the statement of cash flows, but we typically see that there's a separate, let's say, Excel workbook that's kind of behind the scenes that you're using to prepare your statement of cash flows. You'll prepare that workbook, then you'll transfer that information, those final amounts, into your actual statement of cash flows. So when you're preparing that Excel cash flow workbook, you want to ensure that the prior year and current year balance sheet amounts agree to the financial statements. Now, you should never prepare your statement of cash flows workbook until you have a solid balance sheet, meaning that you don't expect any more changes in the amounts in your balance sheet, including, any new line items in your balance sheet. Because your balance sheet is really your starting point for your statement of cash flows. That's going to drive your activity in that cash flow statement. Now, another, best practice here is that the amounts and categories in the cash flow workbook, they should be identical to the balance sheet per the financial statements, including rounding. So however you're presenting your balance sheet, maybe it's, I would suspect, at least in dollars, but maybe even, the thousands. That's how you want to prepare your cash flow workbook. And using whole numbers, not including pennies, for instance, will help with any rounding issues, again, when preparing that cash flow workbook and ultimately preparing your statement of cash flows. Now, you also want to ensure net income and cash equivalents agrees to the income statement and balance sheet, respectively. This has been a consistent theme throughout this video series, just really making sure that amounts in one area of your financials agree to other areas in your financials, if they should agree. And no exception here, this is still a consideration on your cash flow statement as well. You also want to consider if there are non-cash items that need to be separately presented. And we've provided some common examples that we see. First being right of use assets and lease liabilities. Now, this is relatively new where, operating leases are now pulled onto your balance sheet via a right of use asset and lease liability. Those transactions have non-cash implications and thus have implications on your statement of cash flows. Some other examples: changes in the fair value of interest rate swaps, foreclosed property. So when you initially transfer that loan to OREO, for instance, other real estate owned, that's a non-cash transaction. Unrealized gain and loss on available for sale securities and related accumulated comprehensive income amount. That's all non-cash. And then lastly, net loan charge-offs, also non-cash. Again, these are just some examples. There's certainly others, but keep an eye out for those non-cash items because they should not be reported as cash inflows and outflows on your statement of cash flows. Megan, how about the last two?
Yeah, great explanation, David. Going into what we had talked a little bit about on reporting within the face of financials, what are some new significant items that may need to be disclosed? So anything over that 1% that we had been talking about. So you're going to take a look at the changes in other assets and other liabilities. Are any of the changes relatively large? Are they worth disclosing at a separate level? If so, then are they going to be separately presented? Relatively large changes may also be indicative of those non-cash items that David just gone through and reviewed. We also want to make sure that the cash flow statement has no variances, and this includes with those non-cash items, making sure that we're not missing anything in what we're going through and reporting and disclosing. Well, perfect. I've had a great time recording this on how to prepare financial statements and best practices for banks. David, I hope you've had a great time as well.
Yeah, it's been great. Yeah, and hopefully our audience found some useful tidbits in these videos and in the checklist, and hopefully it's a good resource for you all as you look ahead to preparing your financials.
Yeah, any other further questions? Remember, Barry Dunn is always a source, so keep us in the back of your mind.
Awesome. Thank you, Megan, and thank you, everyone. Take care.